All right, everyone, welcome back for another episode of This Weekend Charts via Carnivore Trades and Wall Street for Main Street. Starting off as usual with the S&P 500 here. We're going to notice we had a very light volume trading week as predicted in the last video. Uh, Again, with the holiday week up ahead, it is very common for institutions, traders, and so on and so forth to take the week off or leave early for vacation. And that's why you err on the side of caution, and you tend to not want to overtrade if you're an active trader. You don't want to make too much out of the action that we see through this week. That said, there was some pretty juicy material and some pretty interesting price action overall throughout this week, and we'll get right into it here. So S&P 500 making a new all-time high, closing on the week at 433.72 on the SPY here, which is the ETF that tracks the S&P. However, some interesting price action here. We talked about volatility getting lower here, and interestingly enough, volatility got lower. We finally made another low in the VIX here as we cracked through that 15 level. Now, these tail candles here, as we can see, are not actual prints. These are fake prints. They're misprints. And we can see here that they did not actually take place, but we did make a new low here. And as you can see on Friday, volatility, at least on the VXX, which represents short-term volatility futures, did crack up and actually go positive on the day as the S&P made new all-time highs. Now, this is a divergence that can be a leading indicator of future volatility in the near term. As you see the VIX move up with the S&P, it essentially represents hedging that's going on and protection buying as the market gets more and more extended. However, with the light volume, we won't make too much out of it at this point. What we're really looking for at this time in terms of a potential correction is just a high volume reversal day with real follow through. We've had a few high volume reversal days. We had some in March, February. I called these out, basically nailed the top each time. However, the depth of the correction ended up being much more shallow than I anticipated. And I have some good information that there was some off-balance sheet liquidity injected during these times to keep the markets from rolling over. We saw even in May here, we had some high volume reversal as well, and the markets were saved. That said, what we really want to see if we're going to actually call a correction is, again, high volume reversal, but follow through. Can we break through these trend lines? Can we close below the 50 moving average? Can the Fed actually stomach that? We'll see. But at the same time, in the near term, we're going to respect the markets as they are making all-time highs. We're not going to get overly bearish on the short side, and we're just going to look for the best setups possible. That said, let's move on a little bit to oil. I know I haven't talked about oil in a little while, but important to point out, we did crack through the 75 level. Looking at a longer term chart here, this descending wedge here, this is one that I've been covering for a few months now. I actually pointed this out on Twitter a while ago, but I pointed out the breakthrough, or excuse me, the breakout here. Now, oil's really had a nice run. It's actually exceeded what I thought it was going to do, at least in the short to medium term. Again, I still think you're going to run into a lot of resistance here. You see the giant red bars here, and then you see the bullish consolidation during the counter trend rally that failed. There's a lot of institutional money here, in my opinion, and I think that this pivot here is going to provide a lot of resistance. Now, with that said, yes, I am expecting a pullback, maybe some backing and filling in oil, but it is now certainly in a much higher trading range, barring some type of major liquidity crisis. I would say the new sort of low here is probably in the 55 or 57, area. You have this 50 moving average sloping up on the monthly chart. Now, I would say your max downside is probably this downsloping trend line. However, it could take a few months to get in that range. Again, I don't think that it's going to get that low. Again, 55 is probably your max downside in the near term on oil. barring some type of major liquidity crisis. But I do think that this pivot here is major resistance, though. So as far as what that means, if you're long oil, you know, it depends on your outlook. Can you trail your stop? Sure. If you're a longer term oil investor, I think you're fine. Just you know, you could wait for a dip to add. There's lots of things you can do here, but if you're more of a shorter term trader, I would just trail your stop in this area. If we look at the XLE here, which is the main oil stocks ETF. Again, you're into this heavy area of resistance. So notice this trend line going back to 2009, 2008 rather. This is where the lows were made during the panic, the global financial crisis, and we had this nice trend line here, which we tagged in 2016, tagged it again in 2018, broke through it. So now this is a major resistance area. You also have the 50 monthly moving average down sloping, which you're now into. Again, I think these, you know, the oil producers and so on, they can have some upside, but look at what you've done here. 1, 2, 3, 4, 5, 6, 7, 8, 9 months in a row higher. As you're into resistance here, it would not surprise me if we took a breather and had to do some backing and filling. But notice the volume here. Good volume here. Good buy volume on at the lows. Good buy volume pretty much all the way up. So really nothing wrong with the pattern, but you're coming into a lot of resistance. Look at all this chop here and the 50 MA and this trend line. Oil's going to, or the XLE rather, is going to need to do some backing and filling to get through that area, in my opinion. Also, as far as energy is concerned, got to look at nat gas. So look at nat gas, nice little wedge here. I mean, nat gas was beaten down for a long time. Great breakout here. Again, coming into a lot of resistance, just like, you know, just like oil and just like these energy stocks. This giant red bar is a lot of resistance. You do have this pivot here, and again, this chart's a little bit better. You did consolidate nicely, so you are building that strength up, and you did build that strength up to now push and attack this red bar high. I think that nat gas is probably going back up to 420, maybe even as high as 440 before it really stalls out. But again, you know, just the energy sectors had such a nice run over the last year. You know, if you're long, trail your stop, be cautious here. I do like the sector. It is in a much higher trading range now. It's, you know, nothing wrong with the charts on, you know, the weekly time frame, nothing wrong with the daily time frame. They're consolidating nicely, they're pushing. However, on the larger time frames, they're coming into major resistance levels. Just bear that in mind. You know, I don't want to sound like I'm bearish on energy, because I'm not, but in the near term, you know, we are coming into some headwinds here. We do have chatter now about governments that are upset with the higher oil prices, and they're potentially putting pressure on OPEC to maybe increase production and so on, because with higher oil prices means slower economic growth throughout the global economy as we come out of the pandemic. So there's that. We do have the OPEC meeting this weekend, and their decision has now been deferred to Monday. I'm doing this video on Saturday, so there may be some more news that comes out, but there is, as far as I know, we did have the deference to Monday. And there was also the the pipeline that blew up in the Gulf. So who knows where the futures open up on Sunday night, but definitely some interesting things going on here in the oil market. So moving on, I want to point out something on corn that I noticed, and then we'll get into gold here. But I'm sure you saw the video that Jason did earlier this week on corn, and him and I talked about this a little bit. And so so the other day I pulled up my charts, just doing my normal scan in the morning, and I noticed that corn prices kind of crashed here and this is Thinkorswim, and the front contract here is December 21st, which I'm not really sure why, but Thinkorswim's weird sometimes. But anyway, I had the December contract as I pulled up my chart here, and I noticed that it crashed here. And so I pulled up TradingView, and on TradingView you can see we have a print of 675 on the close on June 28th, and right here on the 28th, we have a close of 545. So we've got basically a $120 spread of backwardation in corn. And this is essentially evidence that, China, Jason's been talking about this for a while, but, China has bought too much corn. It's literally rotting in the ports, and their commodity buying binge may be coming to an end. So we may be seeing a period of softness in commodities going forward, specifically in the grains and wheats and crops. But I just thought that was very interesting, and I actually had to. I wasn't sure what actually happened. I don't really pay attention to corn futures like that extensively. Um, I actually had to message a few commodities traders that I know and like ask them, is this like normal? Is this seasonal? I know, harvest season's coming up soon. Is that normal for there to be a 20% spread like that? And they said, no, this is actually kind of insane. So there's some serious backwardation going on in the corn market, but that's something we'll keep an eye on. And maybe that leads into other things with wheat and soy and so on. But definitely just some interesting stuff for you guys to check out. But as we move on from that, just wanted to point that out. We got to talk about gold, of course. So gold trading largely sideways over the last week or so. Obviously, we had the big flush during that quad witching OPEX, and price seems to have stabilized here. I think I've showed this to you guys before, but basically, you came right into a 618 fib. So that is holding up for now. That said, again, this price action is pretty ugly. I'm not going to sugarcoat it and call a spade a spade. That said, if gold holds up here, you can actually make a case for there is some bullish tailwinds coming on. For instance, we've gotten really through the chop of the first half of the year seasonally, and really it's kind of seasonally there's some tailwind pressure on gold in the second half of the year. Over a 20-year range of the past 20 years. If you guys haven't checked this chart, this website out, by the way, Equity Clock, there's some really awesome just seasonal analysis of pretty much everything. They commodities, stock market. They got everything on there. It's a really good website. Actually, if we look here, this is gold contracts versus the S&P 500. That actually gains on the S&P 500 starting in August, typically, which is also an interesting month that I have penciled in for the markets overall. You guys know I've been talking about yields and so on, and I think we're coming to an inflection point around August. I think that, there's going to be a lot of pivot points coming up in the next month or so. But gold possibly coming into some tailwinds, but really still has to get back above these moving averages here. First the 20, then you got the 50 and 200. You get back above those, and then maybe, I don't know, you could make a case for an inverse head and shoulders if you have a left shoulder, a head, and a right shoulder. We're not going to really entertain it just yet because it's too premature. But if gold can get back up there, there's certainly a possibility for that pattern to play out. As far as silver, again, I like silver a lot better. It's holding up much more. It's still holding the 200 moving average. Is making a little bit of bearish consolidation here, but if you get back above this 20, and then the 50 moving average, you pretty much negate this pattern, which is nice. I think a lot of the silver squeeze talk, I know that the physical market does not, we all know it doesn't reflect the paper price very much, but I think to an extent, you have to believe that it is at least accounting for a little bit, because silver is outperforming gold here. And the physical markets on gold, the premiums are very high, but on silver, there really appears to be something to this silver squeeze. So I think that just the demand alone is helping the price of silver to outperform here in the near term. But either way, again, you guys know I've been talking about this. Just needs to continue to back and fill. This is a great consolidation pattern. Parabolic overbought, and now I'm putting in higher lows, higher lows, higher lows to attack this $30 area eventually. So yeah, I'm definitely liking silver a lot more, and gold just kind of hanging in there, but ultimately needs it needs some work to be done before it looks better on the charts. Lastly, we'll just quickly go over some news coming out. Robinhood
is going to IPO very soon. They filed their paperwork and everything for that, so that should be coming out soon. Now, this is very interesting because these things tend to be sort of Tower of Babel indicators. These highly anticipated IPOs, and then this is the biggest one. I mean, this is the most highly anticipated IPO of the last year or so, maybe longer than that. And they tend to be Tower of Babel indicators in the sense that they tend to call market tops. For instance, if you look at Coinbase, Coinbase topped on the 14th of March, or of April, excuse me. And when did Bitcoin top? When did Bitcoin top? Oh, that's right, 14th of April. So it's very interesting, and Coinbase is highly anticipated. Remember, it was very highly anticipated. And not only did Bitcoin top, but Coinbase top too. I mean, it was pretty much a pump and dump all the way, and you're now getting a little bit of support here, but finding some footing. But that's a pretty big haircut there. You basically had a high of 429 and bottomed out at 210 here. So yeah, these things tend to happen. Also, another really good example is Blackstone. This was a hugely anticipated IPO, IPO'd in June 2007. So if everybody remembers what happened in June of 2007, we put in a pivot high, hit a little double top in October, and then straight down. So I'm very interested, very interested to see what happens with this Robinhood IPO. It's going to be very interesting. But so that's something we're going to have to keep an eye on and look forward to in the future. That said, I'm pretty sure that's everything I got for you this week. But yeah, hopefully we get some more action next week. Traders should return to the market after, by and large, taking the week off. So we should get a little bit more trading volume, although Tuesday tends to be sort of a holiday hangover day. So generally that can be a bit of a light volume session, but there is a lot of news. We have the OPEC meeting. We have that tanker that or the pipeline that blew up. And there, then we have the Robinhood IPO coming up. So maybe we'll get some more volatility in the market. But until then, you guys take care. Have a great Independence Day, and we'll see you later on the chart.